So coronavirus has had profound impacts on lending in the last couple of months. And a lot of changes have been implemented, which we don't foresee being relaxed until the next couple of months, maybe not till the end of the year, maybe not till early next year. It just depends on how things play out over the next couple of months. So during that time frame, if you have an investor buyer, there used to be a down payment requirement of 15% for a single family home. Now it's 25%. There used to be a requirement for 20% down for condos for investors. Now it's 25% down. And one of the biggest things that's changed, not just the down payment, because most investors were putting 25% or more down. The biggest change is that we can no longer use the rental income from the subject property to help offset that payment. So before, we could use 75% of the gross rental income, even if it wasn't rented out. We would use whatever the appraiser determined was the market rent for that property. So if the appraiser said it was worth $2,400 a month in rent, we would use $1,800 a month, which is 75% of that, to offset the housing payment. So if the payment was $2,000 a month, we would only have to qualify that client for a $200 difference between what we could use for rental income and what the payment was. Now that client has to qualify for that entire $2,000 payment, because we can't use proposed rent in order to qualify somebody.
What about reserve, cash reserve?
Cash reserves hasn't changed.
Okay, but still spell it out. Like cash reserve, when you say it's a calculated expenses, you mean cash reserve, or what? What
Cash
means 6 months of cash reserve?
Is required for investors and second home buyers. Mm-hmm. And it has always been for investors a minimum of 6 months in a reserve of the monthly payment.
Of monthly payment.
So if the payment is $2,000 a month, they just need to have $12,000 left after
they put the down payment and closing.
For second home buyers or vacation home buyers, it's 2 months. Mm-hmm. If you're owner occupant, there is no reserve requirement. You can have $1 left in the bank and you'll still be fine. Okay, in real estate here on Oahu, because there has been such a long-term shortage of real estate, there's much more demand than there is supply. We saw a 30% reduction in the real estate market in activity in April and May of this year due to the coronavirus. But a lot of that is people just waiting to list their properties. There were still a lot of properties that were on the market getting multiple offers, especially in the most desired single-family home price ranges of $700,000 to $1 million, and the condo price ranges from $300,000 to $500,000. Multiple offers still, and that's just the nature of the lack of inventory that we have here in the market, which was exacerbated by the coronavirus. I expect to see a lot of those listings that did not come on the market in the spring to come on the market this summer. So there will be an influx of new listings that come out this summer, and I think as things start to calm down and get back to normal, that there will be a lot more activity this summer, even more so than last summer.
You noticed that there was still above the asking price offers when it's multiple offers? People bid above, or they are bidding carefully?
It really depends on what or how the property is priced. Mm-hmm. You know, just like as always, if the property is priced below the market, you're going to get some bid ups. Right. If it's priced at the market, you'll see a lot of offers around the sales price. Mm-hmm. And if it's priced above the market, people are offering low.
You know, always, like, I'm 17 years in real estate, 17 years people tell me, yeah, but now is the market, but I'll wait until the deals comes up.
Yeah.
And I tell them, the deal is if your offer is accepted. That's your deal. They don't understand.
No, and they never will, because especially if somebody's coming here from the mainland, because what they're looking at is a totally different market. They're looking at a market in a state where there's typically plenty of inventory, and buyers are able to negotiate prices with sellers because there's lots of inventory. Here, there is a 60,000 home shortage of real estate on Oahu.
That people don't understand. They cannot grasp it.
That means there will always be a high demand for real estate here, because they're not going to be building $60,000 or 60,000 homes here on Oahu to catch up to the demand. So
no way.
No. And especially when people are looking at foreclosures to get a good deal, they're not going to get a good deal at a foreclosure here unless it's at an auction. Mm-hmm. Because the banks, because they know how valuable real estate here is, they're listing their foreclosures with REO companies to sell them at the market. The only time you really get anything below market is at an auction, but even then the buyer has to pay a 5% fee to the auction company.
A non-refundable.
Non-refundable. Yeah, it's a 5% fee, which if you get the home 5% below the sales price or below the market value, you're basically buying at the market value because you're paying this 5% fee. So there aren't really deals here. You want to find a property, if you're going to buy a primary residence, you want to buy a property that you're happy with, that you want to live in, that is going to suit your needs and your family's needs.
And lifestyle.
And lifestyle, and buy it. In the long term, you're not going to regret it.
Right, because the rent, no matter what, is very, very expensive.
Yes. Now, you can rent here for less than it would cost you to buy the same property, especially if you're doing 100% financing. So, if you're looking at a place to rent, that's $2,500 a month. If you were to buy that same place, you'd probably be spending about $3,000 a month.
So that's important.
But there's other advantages to home ownership that you don't get with renting. There are tax advantages to home ownership, as you can write off the property taxes and the mortgage interest. And then long term, Hawaii real estate appreciates at 6%. Over the last 40 years, condos and single family homes appreciated 6%. So yes, you're paying a little bit more to own, but you're building your wealth over the long term because that real estate is going to appreciate at a much higher rate than you could ever save. I mean, if you have a $500,000 property and it appreciates 6% 1 year, that's a $30,000 appreciation just in the value of that home. As you continue to pay that loan down and build equity, you're building your wealth for the long term.
Especially if you're living here 5 to 10 years, that's substantial.
Yes. Now, if you're going to buy it and sell it in 2 or 3 years, you're probably going to lose money.
Right.
Unless you're buying a trash property that is a complete teardown and you're going to rebuild it and resell it, unless you're doing that, you're going to lose money if you sell it in 2 or 3 years. We have a free appraisal report. So appraisal reports for VA are $675 or $695 for conventional, and those fees are completely waived for all of our home buyers. For first responders, and that includes nurses, doctors, firemen, police officers, healthcare workers, and active duty military. We're providing an additional $1,000 off the closing costs, and that is for any transaction that goes into escrow by the end of June.
It has to get into escrow by the end of June.
Into escrow by the end of June, yes. Unless it gets extended. It was originally set to expire on May 31st, but it got extended to the end of June.